Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video. And in today's video, we're going to walk through some hacks that have recently happened. That's right, even more hacks, this time on the Solana blockchain. We've also had another lending platform halt withdrawals. So we're going to go through that as well. When is crypto going to get cleaned up and not cleaned out? Lots of people losing lots of money. So we'll summarize with our thoughts on how you can keep yourself safer in the crypto space. If you enjoy this sort of content, mash up that like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video. Right, let's get down to the desktop. Okay, so we're going to start on CoinMarketCap. So we've got the total market cap of all crypto up 3.33% at the time of recording, $890.06 billion. Now, Nick and myself are of the feeling that this is just a bit of a relief bounce. We are expecting lower lows. So, be careful in the market. We do expect there to be much more value coming in the coming weeks and months, so definitely stay tuned. This is the time to be heavily engaged in cryptocurrency. This is where most people become disengaged because it becomes quite boring and potentially miss out on the huge gain opportunity that is going to sort of come over the coming weeks and months, right? So Bitcoin is currently at $19,500, up 3% at the time of recording. But again, we're expecting much lower lows. So lending platform Vold looks to restructure amid crypto downturn, suspending transactions. This comes as they had about $190 million worth of withdrawals since the 12th of June. Again, lots of people taking their crypto off of these lending platforms and off of exchanges. Now, there's an awful lot of people, particularly social media aspect of things, warning people not to take their crypto off of some of these lending platforms and off of exchanges. And I think that's a dangerous message to be delivering, but I understand it at the same time. There's a lot of influencers here that are like, the whole system's going to collapse if everybody withdraws off of all of these platforms. And yeah, to a point it will, but I think you've got to keep your capital at minimum risk, and obviously people are going to have different risk tolerances, right? So try telling somebody that's lost all of their money, their whole life savings, that's locked up in Celsius right now, that actually they should have just leave everything on the exchanges and lending platforms. I think that's a very poor message to be delivering, in my humble opinion. It's just my opinion, but let me know what your thoughts and opinions are in the comments below. So Singapore-based crypto lender obviously has suspended all their withdrawals on trading and deposits on its platform as it looks to look at its restructuring options. So yeah, look, this is one that was backed by Coinbase, right? So it doesn't seem to matter about the size of the company, the backing of the company. It's a real downturn, and I think it's going to get worse before it gets better. The other thing to obviously talk about as well here is Solana-based liquidity provider 𝗕𝗃𝗪 hacked for $8.7 million. So this is something that happened on Sunday. Temporarily suspended its service while it investigates what's happened around the exploit. So again, there's lots of hacks going on. There's lots of I guess companies that are suffering with liquidity crisis, going insolvent, even exchanges being touted as secretively being insolvent and so forth. So I think this is a time where we need to look at our portfolios, make sure that we got the right risk management in place. Like, you've got to treat your investments like the wealthy treat their investments, right? They have good risk management, and it's really important. We should be having or exposing ourselves to the least amount of risk. Sometimes there's risk that we take on that we don't even realize we're taking on. For example, stable coins. That is a risk. People don't understand stable coins. They don't understand that some are pegged 1-to-1 to the dollar, some are pegged to a string of text, right? And basically nothing. Some are linked to a basket of assets. You know, some are linked to debt and various other, you know, things in the real world, right? So we have to be, I guess, understanding the risks itself. So I think, you know, people should take this time in this market to understand what exposure, you know, risk exposure they actually have. You know, make sure they understand the risks, and then look to implement a risk management strategy that, you know, is within your risk tolerances. Everybody's going to be different. Everybody's going to be willing to, you know, leave a certain amount of money on exchanges whilst keeping the bulk of their portfolio on, say, a nano ledger or cold storage, for example, of some sort. So there is a link in the description if you haven't got cold storage wallet. We like to use Ledger. Link is in the description. Do check it out. Many video tutorials on the channel under the playlist Crypto Basics if you are interested in finding out more about that. So yeah, definitely worth checking that out and make sure that you've got that risk tolerance level in place. But I think, you know, the biggest takeaway from this video is I want people to understand what the risk tolerance is that they have and what risk exposure they've actually got, because I don't think people fully understand what exposure they've got. China, again, coming out calling Bitcoin a Ponzi scheme, but saying stable coins are fine if they're regulated. So, you know, I think we're going to see this crypto is a Ponzi scheme more and more. Now, don't get me wrong. There are crypto projects that I think are Ponzi schemes, right? There are rug pulls. There are Ponzi schemes. There are projects that look like on paper like they're doing really, really well, that are Ponzi schemes that in a few years' time are going to, you know, be known as the biggest Ponzi schemes in history. They're not known as it yet, but they will be. It will become apparent. There are, you know, projects that, you know, have already become quite apparent. Play to earn, learn to earn, move to earn. There's lots of, you know, these projects that, you know, potentially are just Ponzi schemes. Not all of them. There's some absolute gems in there, but there are some absolute Ponzi schemes in there. But to say that all of crypto is a Ponzi scheme, I think is just fundamentally wrong. Again, there will be people that will say, you know, what is the point? Why does it need a coin? Why does it need a token? And some of those are going to stand up. There are some projects that don't need tokens, don't need coins, but it is a fantastic way for them to basically build up the capital in order to build what it is that they're looking to build. So, you know, you've got to be careful. You've got to understand what it is that you're investing in. I think that's, you know, why it's fantastic that we have YouTube channels and we have the influencers talking about these different projects, what they are, how they work, you know, and all that sort of stuff. But there is no substitute to doing your own research. Obviously, influencers are not financial advisors. They should, you know, be watched, and you know, the videos that they put out and the content that they put out should be treated as educational purposes only. And, you know, there's no substitute for doing your own research. So definitely worth doing that. But I think we are going to see, you know, cryptocurrency being called out as a Ponzi. We're going to see lots of news saying that it's going to zero. Why are we seeing this, and why is this happening? Well, it happens regularly. I mean, how many times have we seen countries come out to say they're going to ban Bitcoin? It hasn't happened. I don't think that it's ever going to happen, but it's there in order for the wealthy to get wealthy, to scare people that haven't been in these, you know, cycles before. And then basically the weak hands sell at a cheap price, and, you know, the whales and, you know, the people that understand the different cycles purchase more of it at a heap, you know, like a heap of it, I guess, at a huge discount, and then go on to see fantastic gains as, you know, all the I guess all of the adoption becomes really apparent, and things start to become more real. Regulation comes in, and by that point the bulk of the money has already been made and you're out of there, and lots of people getting in paying, you know, a premium for something, ultimately over time. I hope you enjoyed today's video. If you did, mash up that like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video, and I'll catch you in the next one. Take care.